Good day. Ira Epstein of Linn Associates with your metal market wrap-up for this Tuesday, the 9th of March, 2021, 4:15 p.m. Central Time. I'm not waiting to 5 o'clock today to redo the market. I've got to be out of the house later tonight, so I figured I'd get this done. The event of the day was the dollar lower, a bit of a bounce. In other words, up in the bonds and the notes, which means interest rates sinking back into the 1.52 area in the 10 years. And that sign was enough to let go on the stock market to the upside. The metals exploding, nearly $1 higher in silver, gold up $40, copper down nearly 9 cents, but everything else up. And it's interesting because in copper, again, we're going to hear about some of the key areas that come out where the copper is produced. Strikes, and that's because people want more money. So just be ready for it. You'll start hearing it very, very shortly. So, one-day bounce. What day of the week is it? Tuesday. Now, let me think about it in the stock market. Yale Hirsch, Stock Trader's Almanac. Often, when you get a strong move on a Monday, you get a Tuesday reversal, and that carries through to a certain amount. I talked about that yesterday in this, so I wasn't surprised by seeing it. Plus, many of these markets, it's like pulling a rubber band and you let go of it. They got stretched out to the downside, down 11% in the from its peak in the NASDAQ. I can go on and on. How many individual stocks were down dramatically? So you heard all that. But let's go, if we could, and see what it means. It means absolutely nothing so far on the weekly area chart of just closes in gold. It is a bounce. For the week, we are up 1%. Oh, that's what I can say to that. When we take a look at the gold here, we talked about yesterday. This is called an outside day down. My rule that I developed a long time ago is if you take out the high of an outside day down within 2 trading sessions, what it often is this becomes then a bear trap, and the market tries to give you a bounce. That's what happened. Keep that formation in the back of your mind. We come to the swing line. The swing line has still got lower highs, lower lows. You really need to take out 1739.10 to violate that pattern. When you look at the 18-day average of closes, the number is 1758.70. It is falling at about $7 a day, as you could see right in there. You can vary it, but about $7 a day I'm comfortable with. So I'm going to assume that market gets down tomorrow into the 1751.52 area, something in that zone. And that means if I clear this number, that's still a valid resistance point, but I'll have broken that part of the trend. Okay, what's my rule? My rule that I came up with is when you break out and you do this, you have an outside day down and you take out that day's high, unless you go back through that day's low. Until that occurs, the odds favor that now you have a formation where price is going to rush towards the 18-day average and the two often meet. In terms of Bollinger Bands, that works for me. You'd been running the lower Bollinger Band and now you're moving to the right-hand side. And momentum, well, what did momentum do? You did not lose the bearish embedded reading. So I have different parts at work here. The first thing I can tell you is I am not seeing that this formation has done more than call for a short covering rally. If you lose the embedded reading on top of this formation, the odds are pretty strong. 2 of my big rules are that price is going to go back to the 18-day average. So if I'm a bear right here, I'm looking tonight when we reopen at 5 o'clock, if that number loses the embedded reading, and frankly, unless the market is down pretty sharply, it should, that's another nail in the coffin that shorts are going to start covering on. That's how I'm viewing it. So I am looking until this low is taken out that if this loses the embedded reading, I've already got one of my rules at work, that the market favors getting back to the 18-day average. I do not see new short selling on this formation happening. It's more, will you get short covering? And that's how I'm viewing it. In the gold-silver ratio, suddenly take a look. The silver market, which for a few days has been over that 18-day average of closes, is starting to pull back. Could it be that the market's seen its correction and silver is going to start jumping again? In the silver market, not the same formation as gold. You have lower highs, lower lows. Let's go over here and see what this looked like yesterday. Were both numbers embedded? Never. It was just an oversold market. What do we say here often? When price and the 100-day and the 18-day average all start coming together, like they did there. That's a pretty good idea that the market's going to be looking for support in that level. That is not a buy signal. It might be a signal where if you're short, you're looking to take money off the table. And unlike the stock market, which in the stock market, you do realize if you watch financial TV all day, it is a question of where to buy. It is never a question, if they use the word sell, it's where to get out of longs. They never talk on financial TV about being short in the stock market. And that is something you have to acclimate yourself to. In the futures market, you trade both sides of the market, and that's expected. So keep that in the back of your mind. But when you get down here, unless the market's going to run to the 200-day average, and it could, but unless it's going to, and it's not often that you get that far down, it's easier to get to this number, as you can see, than to the 200-day. Well, that's a zone. That's the word, a zone. So the market stuck its neck out, and this was on Friday, comes back up on Monday, and today's Tuesday. You're getting more of a rally. Okay. 2687 is already under 2691.5. Will you attract new selling if you get to the 18-day average? I don't think so, because you're too oversold. Oversold conditions don't beget more selling. They generally are a part of it where the market says, okay, maybe should I be out of my short positions more than anything else. Trend down, bias down, but very oversold, and hit big time support area. In the copper market, the near-term trend is turned back down. Now, when we lost the embedded reading all the way back here, I started telling you I was looking for this market for price and that number to start getting ready. It was around the 390s that I got my ideas for that to be happening. Market played around, gave opportunities here, and then finally you had your break last Thursday, and since then what you're really doing is marching around. The bears have taken control of the market, period. You need to get prices over 417.05 to say, nah, that was the correction, it ran itself out. That could well be the case here. Trying to trade against an 18-day average is rarely good for your financial health. I think that the bigger picture in copper is still bullish. I saw the numbers that are coming out of China for their economic growth, and yeah, they're not looking for quite the numbers that they had before, but I would be happy in America at 7.8% growth, wouldn't you? We're not getting that, I can tell you that part. All right, in the platinum, trend down, bias down, momentum down, and what did you do? You came running in. What do I say here each and every time? First time you hit a Bollinger Band, that's where I think the pros are taking money off the table, especially if you're oversold, which you are right there. Still oversold. And suddenly now what we're getting is the bounce in the market. Has anything really changed? No. But like the silver market, you're so oversold that even if you get up here, you got to get out of that condition to get people wanting to go short again. In the palladium market, what do you do the first time you didn't hit it here, the first time you hit a Bollinger Band? I contend that that's where the pros come out of the market, especially when you're oversold. So you're getting your bounce in the market today. Yeah, this is Tuesday, down $22, not able to turn away from the Bollinger Band yet, but I expect that it will. It's oversold. It's caught in this sideways action. And what's crystal clear, big resistance up here, your first support levels right through there. And what prompted some of that? The dollar. Now, what did I tell you yesterday in the dollar? My rule of thumb. Each consecutive day over a Bollinger Band, I came up with this, so it's my own theory on it, takes away one of the 5 percentage points of 5% of the time the market will stay outside of a Bollinger Band. You're going to say to me, what if it goes 6? Well, it's a sign of even more strength. But what are you using Bollinger Bands for? You're looking at it as that's an area that most likely you don't want to be adding positions on. That doesn't mean the trend is bad. So you got your pullback today. Okay. You're overbought, over the band, now you've moved to the right-hand side. Is anything here flashing a sell signal? I don't see it, but I can argue that the market's getting ahead of itself, and that is important. So I put that all together. I'll be talking to my subscribers in the morning about all this because there's going to be setups down the road that come. Did I see a setup tonight? I really didn't see a setup tonight that would say, oh, tomorrow morning we got to do this, or tonight we got to do this. But I am aware that the market was stretched out and starting to turn. I'll cover in the morning shorter term swing trades, longer term trades in my morning video, throwing out the trade ideas, what I think the market's looking like. On Saturdays, all long-term ideas. You can watch my videos through my QT mobile app on an iPhone, iOS system. You can watch it on your computer screens, your tablets. It works all that different way. I cover these markets each and every time right in this sequence, and I keep the cost darn cheap. It's that simple. $7.95 for 24 videos over 30 days, and then you decide, do you want to stay with it? Many people will go to a one-year subscription. Others will go to month. You decide if you want to stay. You can quit. Go to www.iraepstein.com. Under the word research, it's all there. Thanks for watching.